Hello and welcome. Thank you very much for joining us today. My name is Paul Armstrong and I'm here to guide you on a journey through the subtleties of statistical reporting and KPIs, with references specifically as to how they can be related to accounts payable processing. We will be conducting 2 brief polls along the way. We would appreciate, when prompted, that you simply make your choice of the answers, and we will then look at these and feedback the responses to you. There is also a chat box to the bottom right-hand corner, so if any pressing questions come to mind, please enter them there, and if we have time at the end, we will provide detailed answers. Otherwise, we will return a response separately. Okay, so let's get started by setting the scene. Our subject today is metrics and KPIs. Let's start with a few words to introduce Peter Drucker, because we mentioned his name in our invitations to this webinar. To give him his full name, Peter Ferdinand Drucker was born in 1909 and died in 2005. He was an Austrian-born American management consultant, an educator and an author, whose writings contributed to the philosophical and practical foundations of business. He was a genuine leader in the development of management education, inventing the concept known as management by objectives, and is widely described as the founder of modern management. Let's kick off with a quick poll question for you all. This should be showing on the right-hand side of your screen just about now, and will be open for in the order of 20 to 30 seconds. What we would like you to do is choose the answers from the optional questions on the right-hand side to indicate which are the 3 most important numbers that you might regard for your organisation. Okay, we're going to be closing the poll in 5, 4, 3, 2, 1. Thank you very much for those. We'll have a quick look now at the responses. Okay, well, across our audience today, what we found was that the most important question answer was how long it took to approve an invoice from receipt to ready for payment, as being singularly the most important pressing issue for companies to measure. Secondly was the volume of invoices processed by full-time employees per weekday, month, year. And then there was a bit of a tie between the percentage of invoices without a PO and the percentage of invoices with discrepancies. So monitoring email invoices as a percentage of total invoices coming in at the moment didn't seem to register as being very important. So that's the feedback at that stage on that first poll, and thank you very much for doing that. So following your contribution, let's pose some more detailed questions for you to consider. You now know the 3 most important numbers, but what about other aspects? Do you know what those numbers are today and what they have been historically? Is there a pattern of recording this information? Do you have both long-term and short-term goals, and then targets for each of those numbers? Do you have a written plan to improve the numbers, and do you adjust that plan on perhaps at least a monthly basis? Does everybody on your team know about the importance of these numbers and actually feel an ownership over reporting them and improving them? And finally, and perhaps most importantly, are the numbers visible? Are they posted in your department where they're clearly seen by anybody and everybody? Now, in practice, the terms of metric and key performance indicators are often used interchangeably in business, but there are actually important differences between the 2 terms. Metrics are measurements that can be quantified and are measured over any length of time. They're ongoing and are used to understand the position of an organisation over an extended period. On the other hand, key performance indicators are quantifiable metrics that reflect the performance of an organisation towards achieving specific goals of objectives. KPIs tend to be organizational goals, typically determined by management. They should be easy to understand, have a specific time frame, and lead to tangible, defined action. Therefore, KPIs are metrics, but metrics are not necessarily KPIs. Metrics will remain metrics until you create a goal attached to them when they become a KPI. Now, I think this next slide is really interesting. It's about how KPIs can be either lagging or leading indicators. Lagging indicators are those that give us information about what has happened in the past. They're often easy to measure, but are hard to influence, as often the information is only obtained after it is too late to take any action to improve it. For example, an accounts payable department may measure the number of invoices paid late. And while this information is helpful and may be a valuable measurement to identify a problem area, it's too late for us to react to that information and prevent those late payments from originally occurring. Leading indicators, on the other hand, provide us with information that points to future results, giving us the opportunity to be proactive and change the outcome. If action is taken based on the information presented in these indicators, there is always the opportunity to improve the results of lagging indicators. So in summary, leading indicators drive day-to-day action and are critical to achieving goals. P2P departments often have too many lagging indicators and too few leading indicators, resulting in much time being spent reflecting on what could have been, rather than identifying actions that can be taken to prevent problems before they occur. Consequently, it's recommended that each lagging indicator should have at least one leading indicator that can be reviewed on a timely basis. For example, in the late payment example referenced above, measuring the backlog in the AP department of invoices stuck in the approval process could be an effective way to predict the direction that the late payments measurement will go. Taking action now will improve the result of the lagging indicator as it happens. Whilst it's sometimes harder to remember, harder to measure, it's important to remember that leading indicators are more actionable and significantly increase the chance of achieving successful results. So with these various points in mind, what makes for a good KPI? It isn't just defined by whether it's a lag or a leading indicator, it's also defined by the quality of the statistics, the insights that they bring, and then how they allow you to drive your finance function behavior forwards. To start with, it's important to ensure that any KPI set is clearly defined, that the data source is reliable, and that's regardless of whether this data source is through manual extraction or whether it's generated automatically by an ERP or by some other system in use. Equally important to know is what you are expecting to achieve by looking at the data points. Why have you decided to have a look at the number of invoices received without a PO, for instance? How will knowing this number and the causes of the number help you move forwards? How quickly do you plan to make changes? And what percentage improvement would indicate a good change for your organization? Taking the same example, is your focus internally facing or external? Is the driver in place to ensure that your organization makes use of the PO tools you have put in place? Or is your focus actually on your suppliers, perhaps whilst implementing a no PO, no pay policy? Finally, a good KPI is based on action. There's little point in measuring specific areas of the business if no action is then taken to improve or to maintain them. KPIs will only point the way. It's actually up to management and the team to action them. So let's add in a new area of discussion now. Let's talk about automation of the AP processes. There are some very visible hard benefits of automation within finance, which primarily focus on saving costs and introducing productivity gains that can reduce headcount. However, what were previously considered as the softer benefits of automation have become more and more relevant and more important to organizations over the last few years. For example, controlling payment deadlines and generally improving relationships with suppliers can bring enormous accounts payable benefits. When this is coordinated with dynamic or early payment discounting, the increased revenue stream can be the tipping point to turn what is otherwise a cost center into a genuine profit center. And whether paying taxes, as in the UK, ensuring that you need to be able to submit DTR reports for those companies which are affected by that latest piece of legislation, automation can provide the detail to ensure that regulatory compliance. As every document is date and time stamped at every stage of its journey through the organization, so audit, visibility, tracking and control become far more forensic and far more effective. And finally, by its very nature, the automation of the AP and finance process will reduce the number of invoices that are processed by error, prevent duplicate payments to suppliers, and actually completely reduce the risks and costs associated with fraud attempts. So this is how ITESOFT looks at automating an invoice process. To the right-hand side of the slide, you have your ERP system. To the left-hand side, capture. Capture can be scanned paper, it can be email attachments, it can be electronic data imports, or it can be from a mobile platform. In our most wonderful of worlds, with no touch at all, invoices are captured, validated, extracted, and then matched and passed straight through processing, touchless, to become connected into the ERP as ready for payment. Of course, very few systems are that perfect, so we also provide a comprehensive set of workflows which enable you to enter, to code and post to specific GL accounts, and then to validate through a workflow process that validation, and in turn to approve that so that the payments can be pushed into the ERP system ready for pay. As a supplier portal, external suppliers can come into a restricted set of data to self-service their own information needs in terms of either querying the status of an existing invoice, looking at payments that have been made to see which invoices have been included on that payment. They can also upload new invoices that have been generated by their systems, and even in some instances, for smaller companies perhaps, or for handwritten invoices, there is a mask within the supplier portal which enables them to create an electronic form which is submitted into the front of the system at the capture stage. As an arching capability, there is a full analytics area within the product which allows you visibility from the very first point of capture right the way through to payment, and the ability to report on that for metrics, for KPIs, and also for management and other audit purposes. We're now going to ask and suggest that you benchmark yourself with the best in class. How do you know what to aim for with KPIs if you don't know what is being achieved by your peers and your competitors? In 2017, Ardent Partners, a leading global research body, delved in some real benchmarking data for AP processes. As you will see, they looked at a number of key areas, from the cost of processing an invoice to the percentage of invoices that businesses receive with a purchase order as opposed to receiving invoices without a purchase order. Interestingly, best in class did not always mean that an organization's invoices were electronic or indeed processed straight through. What best in class did indicate was mastery of the AP process, ensuring compliance with PO numbers wherever possible, and the use of technology to support this function. So let's dig a little bit deeper into the numbers. With a cost difference of $12.28 per invoice on the first line in the graph there, a mid-tier organisation processing 40,000 invoices a year stands to save nearly $500,000 per annum. Bearing in mind that the indicative cost for a business of this size to implement a full P2P solution would be less than £200,000, it's very easy to see that at what point the return on investment would be realised, typically in the order of 6 months after go live. Other efficiency indicators tend to move in line with these improvements, such as the percentage of invoices processed straight through, or the percentage of suppliers that submit invoices electronically. Some of our customers at the moment are easily hitting 80 or even 90% of invoices being received electronically attached to emails and being handled automatically. In this graph, the figures for the number of invoices processed for each full-time employee per annum are calculated by the total number of invoices processed divided by the total number of full-time employees in accounts payable. These should not count AP processors only, but should include the entire AP department. That includes managers and other specialists. In short, the number of people that represent the total effort to process and pay the invoices. So let's start thinking about how many invoices your AP functions are handling, and how does this compare, because we're now going off to our second poll question. This is again shown on the right hand side of your screen, and here we have the number of invoices that your companies would be handling on the average basis. Okay, collecting responses. A little bit slow here. Oh no, we've all come in. That's fine. Well, not quite all, but thank you very much. We're closing this now in 3, 2, 1. Okay, so let's have a look at the feedback there from you. Okay, so what we're seeing here is, I'm just going to go back and hold it there. Based on the results that we've seen, most of our audience have come in on the level of 10,000 invoices per full-time employee per week, per annum. Now, the reason that we pulled these various figures out is because recent UK surveys indicate that for manual processing, the average full-time employee gets through 40 invoices per day on a manual basis. If you multiply that by 225 working days, allowing for holidays, bank holidays, and a bit of illness, you're up to that magic figure of 9,000 invoices per full-time employee per annum. And that's seen as the sort of bottom end of the effective manual presentation. If I contrast that with the leaders on this next page, the leaders who are leaders in our previous slide here, you can see that typically they're processing 19, 20, or even higher than that invoices per annum. ITESOFT is proud to say that we have customers who are processing in excess of 45,000 invoices per annum per full-time employee. So based on the poll response from the majority of our attendees at 10,000, you can see that our customers are even achieving factors in excess of 4.5 times the efficiency gain through automation. We're going to move on here and define now a percentage of invoices received electronically. PDF invoices attached to emails that still require manual handling are not considered electronic invoices by definition. Electronically means the ability to handle these invoices automatically without manual touch in straight-through processing. What the survey showed from the Institute of Financial Managers 26 was that for companies with revenues over 1 billion, more than half of their invoices are received and handled electronically, with the balance requiring manual handling. For organisations with annual revenues less than 1 billion, the average drops to only 20% coming in electronically and being handled electronically, with 80% still requiring manual handling. So this isn't within a particular company, this is across the companies that provided answers to the survey. That gives you an indication how the efficiency gains are obviously certainly being gained by the larger companies. When we look at purchase orders coming in with on invoices, across a survey of all organisations, 55% of invoices received can be matched to a specific PO that has been raised. Larger organisations have a higher usage than mid and small-sized organisation. So if you consider a median of 60% of invoices against a purchase order for those large company versus a 50% median for mid and smaller organisations. The reality, though, out there is that there are still a lot of non-PO invoices to be processed, even in large organisations. So we've just seen a number of possible KPIs that an organisation may utilise to measure its own AP functions and also compare it to its competitors. To highlight these, we've broken them down into 7 easy points. We suggest that these are KPIs that you should seriously consider. The average time taken to approve an invoice from receipt to ready to payment. The number of invoices processed per day, per month, per year. And as I say, the magic number for us is 225 working days in a year. The percentage or number of invoices arriving without a PO. The percentage or number of invoices arriving with a quantity or price discrepancy. Perhaps if you're looking at three-way matching with items coming into a warehouse to be counted, then the price and quantity discrepancy percentage tends to rise. Other metrics that can be applied is the percentage of emailed invoices arriving in the organisation as a percentage of total, and the average total cost to process an invoice. Whilst this is a little bit more tricky to get to the metrics on, we've developed some tools, a cost-benefit analysis tool, which actually gives you a pretty good insight into how these costs are derived, taking into account on costs, and even the distraction cost or the time cost out in the business, so that you can get to an average total cost to process an invoice. Final KPI that we would suggest is perhaps looking at the extent of discounts captured as a percentage of discounts offered. Some companies are very hot on this, and even if you were to look at just 1.5% of your total spend through invoices, and think of that as a revenue flow, if your systems are performing well and you're earning your early payment discounts, that can make a significant difference. Of course, there are any number of other areas that you might want to focus on in order to drive greater efficiency. KPIs can be focused on your internal processes, or indeed how your business does business with others. If, for example, you find that invoices are considerably slower to process, you may want to engage with your supplier and offer them faster, easier and cheaper ways to send their invoices in. Supplier portals, emailed invoices all reduce the cost to your supplier and speed up your own internal processes, giving you greater efficiencies at the same time. Here, for example, internal departments are not following up with procurement. The matching process is either long-winded or difficult. Perhaps they may be missing paper. This is a great way in which you might want to set up custom KPIs to prove that AP are working efficiently, but perhaps the rest of the business could seek some improvements. Another occasional aspect that we find is that procurement staff are doing business with unapproved vendors, and then or staff perhaps out in remote locations are doing business with unapproved vendors. And then when the invoice comes in, retrospectively asking for the vendors to be added into the system. So a KPI custom here to keep a look on would be the number of suppliers being added per month, and keep a monitor and track on that. We asked right at the beginning of the webinar whether you have the right dashboards. Are all these in one system? Or are they necessarily a combination of reports from your ERP system, other internal documents, spreadsheets, etc.? Having access to all of your department's critical information in one location is itself a huge time saver and a subsequent cost saving to the business. Once you have defined the most important KPIs for your organization, ensuring that the data is visible and can be reported on, making sure that it cannot be tampered with becomes the next stage to gaining benefit. Our analytics capability, based on the data held within the AP automation system, provides dashboard information that can be easily drilled down into and used for that all-important KPI metrics, and in addition, management reporting purposes. With all of the above in mind, we have focused our resources on creating the next generation of automation software for the finance function. It's called STREAMLINE for Invoices. We know that more and more businesses are looking for solutions that they can use that don't carry large IT footprints, that are highly customizable, and that provide immediate returns. STREAMLINE for Invoices is not only a cloud solution, but it is adaptable to business needs and scalable to offer flexible sizing to businesses that are growing, whether that's organic growth or through merger and acquisition activity. Combining the best reading rates available today with inbuilt workflows for reconciliations, businesses are able to drive real benefits from day one of implementing the solution and achieve their investment breakpoint even earlier than with historical automation solutions. As you would expect, we have also thought carefully about our reporting tools. Using Agile analytics and the latest generation of data viz, we're focused into placing control back in the hands of people who use the solution rather than to be reliant on IT assistance. After the webinar closes, if you would like some further information about KPI control and metrics, there is additional information available on our website. The address is on the bottom of the screen there. The document on the left is a new white paper, released only in the last few weeks. And these documents together examine the understanding, analysis, and control of both metrics and KPIs within the finance function, and how using technology to enable the business, you can drive real benefit and advantage. Let's have a quick look, and I mean quick, have a quick look at how ITESOFT is positioned in this marketplace. Our overarching ambition is to develop solutions to digitalize processes and documents. Today, we've been focused on the supplier relationship end of our product capability. We also have a similar front-end capability, which is where customer onboarding, membership management, and contract life cycles can be committed to capturing electronic information and processing them through your organization by way of workflows. Management and control of internal processes can be handled by our third product, which is secure capture and process automation for operations, which is with regard to contract management, review management, recruitment processes, and a number of other areas. Some key figures about our organization. We were founded in 1984 and are listed on the Paris Stock Exchange. Our turnover last year was almost 26 million euros. We are solutions used in 35 countries with 80% of Europe covered and have partnerships in far-flung remote areas. 650 clients and process over 1 billion documents annually. We have 211 employees in the UK, Germany and France and subsidiaries, And finally, we reinvest, we're proud to say, 17% of our turnover back into research and development to improve our products. We have a highly desirable customer reference list. I list just a few names there. We'll just pick out key ones like Jaguar Land Rover, London Ambulance Services, Mott MacDonald, PepsiCo, Porter Cabin, Prince's, various hospitals, universities, and so on. So questions. We have had a few questions come in, but as we're banged up on time, what we'll do is, and I can see the questions, actually one or two of them are quite detailed, so thank you for that. What we'll do is take the opportunity to send you a separate response on that, and then if you wish to create a dialogue, we can take that up with you. So our next webinar is entitled, Why Do Digital Transformation Projects Sometimes Fail? This is set for the 19th of April, next month, 19th of April at 12:30. So please, if you've enjoyed today and got a couple of nuggets out of it, visit our website to register for that next webinar. We will also be providing you with email reminders. So thank you very much indeed for your attendance and your time, and I appreciate that very much. We look forward to continuing to talk with you at some stage. Thank you.